Our next guest was the man who said to fade the banks exactly 1 week ago.
What we know is, of course, financials have been the dream with industrials, and they've been a real misfortune for anyone who's been long or overweight, and I don't think that's going to end.
Good call, but the chart master Carter Worth of Cornerstone Macro is back at the plasma with a new call. Hi, Carter.
Yeah, I mean, you can't flip and flop too much, obviously, but I'm surprised, frankly, how well they recovered intraday, meaning we know that the financials out of the gate with the big earnings reports were down hard, and yet it's their reversal that actually caused the reversal in the market, especially as tech started to falter. So my hunch is that they're telling us that we've actually had all the selling, at least for now, that we're going to have. Regional banks, very bad, but the big money center banks, quite good. This is the XLF overall, and obviously we have this downtrend. But if you have a well-defined head and shoulders top, head and second shoulder, the neckline right here, you should break. And instead of breaking, we held, and then we held again, and then we held again. Now, if I add the bottom line, one could say, all right, but isn't it ultimately going to break? That's the risk. But keep in mind where this level is, this 26 level, and look at actually the long-term chart of XLF. What we know is that XLF is actually sold off to a level where it is essentially bounced repeatedly, and it came to life off that line again. My hunch is that they're telling us, even the intraday recovery day, while they close lower, that they've had their beating, just as industrial to some extent. The market really is going to be dependent on how these tech names perform in earnings.
Carter, come on over to the desk.
Whoa.
We've got questions for Carter.
So it's just a statement.
Well, let's
Come on, we've
CBW is in the house
for a long time.
Thanks, Michelle. Does the chart of the KRE, the regional banks, look similar to XLF?
No, KRE is worse, which is KRE has been better, right? The leading for the better part of 2 years, and yet of late, and specifically the last 2 weeks, the regional banks are the ones that are under the most pressure. Whereas the money center banks, they used to call them that, they don't anymore, the big heavy ones, were so bad that they're actually stabilizing in the face of what some say were good results and others say were bad results, dealing with deposits and some of the loans.
So how far does that have to break, that trend line that you just drew there? How far does that have to break? Is it a percentage that you're looking for to break below to change your stance on it?
Meaning, so the reason for caution for a long time in this is because basically the way forward is industrials and financials. But to have the news that hit and then to hold the way it did, albeit down a day, would suggest that that's not the risky part of the market. Now, I think they will bounce off that trend line. It would be at least a 2% violation of that would cause it. It's all about tech now.
Carter, how does volume play into this? If we see, I mean, today was decent volume in the financials. If we see some big increasing volume, does that make you think that maybe we're going to get that breakout?
Right. Well, volume is most important at tops and bottoms, and we're not really at a top or a bottom. That's when you have a major transition. We're just a sell-off 12% to a trend line, and as of now, it is holding.
I'm going to go back to the original thing that we were talking about on the show, 2,800 on the S&P 500. And I'm going to incorporate a game that we play begrudgingly. Trade it or fade it. What
Fake out or breakout?
What would you do?
I don't know.
Or fake out or breakout? What would you do at 20? Yeah.
Oh.
So you think we're going to go down?
In order to go higher, it's not the market goes higher, parts go higher. We've had a huge move in staples, so whatever potential existed has been exploited to some extent. Energy's come to life. We know consumers come to life. Banks are sort of dull here all of a sudden. What is it that takes the market higher? It's got to be tech. Tech is extended. Tech shows the crack of Red Hat. You know, other stocks were a wobbly day. New York FANG was down today with 3 of the 5 stocks getting upgraded. Not great action.
Would you fade it?
So buy it or deny it. Well, I just said at the top of the show. I just said at the top, although Carter can sway, it's amazing how he can sway me. Should be like a song. I mean, I think the Rolling Stones, didn't they?
Amazing how he can sway me? That song? Number one.
But I'll say this, I got to stick to my guns and say the fact that we took out, we're at this 2,800 where we should have gone lower the rest of the week, leads me to believe maybe one more shot at 2,875.
I tell you what, this is now the 4th trip to 2,800, and I pointed out on the 3rd trip, which was just a few days ago before the $200 billion was announced, I actually look at CFTC data on S&P futures, and I'll tell you what, they're significantly lower than at every other time we've gotten here. I think people are underpositioned here. I think sentiment and positioning is in favor of it going higher.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.